Bitcoin started the year, at 58, or well, no, actually it was even lower than that, I believe, but it was at 58 for a big part of the year. And of course, now we're pushing up against 100. So these two sound money assets, sound money alternatives, things that could be a neutral reserve currency, they know it. They can see the problem, and they're responding. And my further belief is that we need to return to sound money. And so the people in the gold camp and the people in the Bitcoin camp, we're all working for the same thing, which is to get rid of the Fed and to go to a neutral reserve currency that's sound, so that our kids and grandkids don't suffer with the cycles that we've all suffered with.
Prominent financial analyst Lawrence Lepard emphasizes the cyclical character of Bitcoin, pointing out its history of steep price spikes followed by corrections. He believes that during the present bull cycle, Bitcoin may hit $200,000 before seeing a correction that would return it to around $100,000. His use of the power law model, which shows the price fluctuations of Bitcoin as standard deviations from its baseline over time, 5 such cycles have already been recorded, is the basis for this prediction. Lepard believes that this pattern will serve as a trustworthy indicator of future price movements. He also emphasizes how Bitcoin is a good example of digital sound money and how it is ideally suited to a society that is moving more and more toward digital solutions. He does, however, advise investors to stay clear of using excessive leverage during Bitcoin's highs and to use a well-rounded approach while negotiating the unpredictable market. Take a moment to like this video, subscribe to the channel, and hit the bell icon for notifications on future content. You can also explore our other videos about cryptocurrencies. Thanks for watching and enjoy the video.
If you look at history and if you look at the cycles and you look at what tends to happen when it runs, and it does one of these runs, it tends to go 4x the base. The base was kind of 50 or 60. So I easily see it in the cycle hitting a peak of 200,000. Then everyone will be out over their skis and a lot of people will be levered up, and then we'll have a cleansing downturn, which will probably bring it back down to 100 or so. I'm still comfortable buying it here and have bought some here. But as it goes higher, I'm pretty loaded up on it. I probably won't chase it into the 200-300 range. I know there are people who think it'll go to 300, 400, 500, and that's possible.
But when does it stop, and how dangerous is it?
Well, that's the thing. I like to use a model called the power law model, which is a log of time and a log of price, and it kind of has a baseline. And what it shows is that it tends to go 1 to 2 standard deviations above it on these bull market runs, and then about 1 standard deviation below it when it corrects. And that's, you got 5 of these cycles now since inception. So if you get on Twitter and you go to Fred Krueger's site, you can see a lot of that, and it's very well mapped out. And so you can kind of get a sense of what's likely to happen to the price. I think they're both forms of sound money. It's analog sound money and digital sound money. We're moving into a digital world. I do think Bitcoin will ultimately prevail. It's going to take a lot of years, decades, but it's going to happen, in my view. It's a smart thing, in my opinion, for the U.S. to lean toward the Bitcoin side. And the reason is that China and India and the Middle East and Russia have all been large accumulators of gold. And so it would be kind of a 3D chess move for us to say, oh yeah, that's great. I'm glad you guys all have that metal, but we're going to support an underlying sound money standard based on Bitcoin. And by the way, we happen to be leaders in that area, right? My top assets are just all around are just gold, silver, and Bitcoin. Right now, probably of those 3, silver's the cheapest. It's kind of stunning to me that silver hasn't done more than it's done, particularly given all the new applications that are coming out. We need solar, and this solid state battery stuff will start to kick in eventually. And so, and it's underperformed massively. Now that's partly because the stock to flow is higher than gold, but I like them all. I like all 3 of them. I don't like stocks that much. Commodity stocks and foreign stocks. Procter just had a nice chart showing how cheap international stocks were compared to the U.S. stocks. And I just hate bonds. I just don't see them. And I know there's some people who think, well, you'll have a deflationary collapse. You'll be really glad you own a 30-year because, you'll be locked into a return when there are no returns anywhere. I just don't see them letting a deflationary collapse happen. Now, it's possible, though, that it could overwhelm even the printer, and you could get outright deflation. I don't know. It's a messy situation is the only way to describe. The gold stocks, as you know, and as I've talked about other podcasts, really haven't responded the way they should have. Gold's up 30%, the stocks are up 30%. Typically, the stocks are 2 to 3x the gain of the underlying metal. And in this case, that has not happened. And the reason for that is if you go on Bloomberg and you check the future forecast, nobody thinks the gold move is real. Everybody thinks, oh yeah, it's at 26, but it's coming back to 2,000. And the ASICs, which is the all-in sustaining cost of mining an ounce, are going to continue to march up with inflation. $2,000, pretty soon your margins are gone, right? And so what's got to happen is there's got to be a shift in psychology where people say, oh, this is the real deal. And gold's not stopping at 25 or 26. Gold's going to 3, and then it's going to 4, and then it's going to 5. And I think those things are happening, obviously, over a course of several years. But until they get this fiscal thing solved, and it's not an easy fix, to me, it's very, very clear that we've got inflation in our future. There's no bigger gold bull than me. I mean, I think we're going to 3,000 within the next 6 months. I think we're going to breach that. We need to. Gold is so deeply undervalued; it's insane. It needs to be in a different zip code. So I see 4,000, 5,000. At the end of the cycle, it could be 20, 40, 50. I mean, which sounds absurd, but it's not. It's really not. I mean, if you take it and if you did the math the way we did it in '71 when we were on a gold standard, Brent's done this actually. You need to be at $79,000 per ounce gold to balance the out, and that's assuming we have the 261 million ounces.
Into that a bit. Break that into it a bit.
So just take the broad monetary aggregates from the '60s. Right. Divide U.S. theoretically has 261.5 million ounces of gold. Okay. And I say theoretically because Ron Paul personally said to me, "I'm sure we don't have it." Yeah. Okay, so, but all right, fine. Let's assume we do. Okay, for the sake of argument, and it's in the Treasury. The Treasury owns it, and they could mark it up. They could turn around and this is what Luke is proposing, and it's a smart idea. They could mark it up to some saying we're going to go back to a gold standard and buy and sell at that price. But anyway, back to the math. Back in the 60s, early 60s, before we started the Vietnam deficits, you could take the monetary aggregate, divide by those number of ounces, and you came up with a $35 reference price, which is what they had, they set it at Bretton Woods. Okay, same math, broad monetary aggregate, 261 million ounces, $80,000 an ounce for full coverage. I mean, it's nuts, right? I mean, it's just now you don't need to have full coverage to be on a gold standard. Yeah. There are many successful gold standards that have worked at 20% coverage or 30 or 40% coverage. But the point is, even 25% coverage would imply a $20,000 an ounce gold price, which is a long way from 2,700. So gold, if gold is going to be used as money again, it is deeply undervalued.
For Lawrence Lepard, the key to a stable economic future lies in returning to sound money principles. He views gold and Bitcoin as crucial to this transition, advocating for their use as neutral reserve currencies. Lepard believes this shift is essential to break the cycles of inflation, debt, and economic instability that have harmed previous generations. He also stresses the moral importance of adopting sound money to protect future generations, shielding them from the damaging effects of fiat systems. To receive daily updates on additional ideas from Lawrence Lepard and other prominent figures in finance and crypto world, remember to hit the notification bell, like, and subscribe. Now let's return to the interview to gain a better understanding of Lawrence Lepard's thoughts.
Right now, debt to GDP in the United States is about 124%. And we've got a fiscal train wreck going on, and the government, what happened is the government spent a lot of money during the COVID event, and they never cut back. In fact, they stepped on the gas. And so we just finished a year where they spent $6.75 trillion, which is almost as much as they spent in the peak year of COVID. And we've got an economy that's full employment, or close to full employment. And we've got, a stock market that's at record highs. And of course, they did this to try to win the election, and they weren't successful. But I think that's part of the reason why they were so profligate. And, really until Trump won, and now they've created this Doge committee, there's been zero discussion about the debt problem, but it's a big problem. I mean, it's going to cause serious economic issues in the next year or two. As you know, this Doge committee, Ramaswamy and Elon have decided they're going to try and cut $2 trillion in annual costs. And my response to that is good luck. I mean, I'm all in favor of what they're trying to do, and I do believe they will cut some costs. No doubt, there is some government fat, but as I said in the speech I gave here a few days ago, 80% of the money that's spent by the federal government is in the big four categories, which are Social Security, Medicare, defense, and interest. And those are very hard to touch. Go after entitlements, that's like the third rail. Defense, maybe they'll take some money out of that if they get peace in the Ukraine. But the interest costs continue to ramp every year, and defense is pretty untouchable as well, although maybe they'll be able to cut something there. The remaining 20% is the rest of the government, and even if they take a hatchet to that and cut 30% of that, it's a couple $100 billion a year in savings. In a year where, last year they ran 1.8 trillion in deficits, and this last 6 months annualized, the deficit run rate right now is $2.4 trillion. So, let's just say, give them their due. Maybe they cut $400 or $500 billion, and that would be hard to do, but maybe possible. It would still only take you from 2.4 back to where we are now, 1.8, 1.9. And the point is, the slope of all the curves is accelerating very steeply. Interest cost, federal spending, deficit, et cetera. And this is going to lead, in my view, as I've said many times, is going to lead to a sovereign debt crisis and a currency crisis. And you can already see that. The evidence that that's taking place is that Bitcoin's at record highs and gold's near record highs. And I mean, gold was at a record high just recently, just backed off a little bit. But gold started the year under 2070, and now we're playing around with 2,600, 2,700. Bitcoin started the year, at 58, or well, no, actually it was even lower than that, I believe, but it was at 58 for a big part of the year. And of course, now we're pushing up against 100. So these two sound money assets, sound money alternatives, things that could be a neutral reserve currency, they know it. They can see the problem. And they're responding. It's a mess. It's a real mess. And this is a fiscal mess without the stock market or the economy being in trouble. I mean, the last two times the stock market went down substantially in the 08 bust and in the 2000 bust, you had enormous deficits following it. You had an enormous unemployment following it. And so if our stock market gets broken at some point, then I think I'll move into kind of the next point, which is I think we know how the Federal Reserve is going to have to respond. And I call it the big print. I mean, they're just going to have to, go back to QE, go back to ZIRP, maybe do yield curve control. I mean, and we're already starting to see that. I mean, I find it extremely interesting that the bond market, here they are, they've cut interest rates, and yet the longer bond, has gone up since that interest rate cut. And I'm kind of like, wow, how did that happen? Doesn't make sense. And my further belief is that we need to return to sound money. And so the people in the gold camp and the people in the Bitcoin camp, we're all working for the same thing, which is to get rid of the Fed and to go to a neutral reserve currency that's sound, so that our kids and grandkids don't suffer with the cycles that we've all suffered with.
According to Lawrence Lepard's study, the U.S. economy is in a concerning position, with the debt-to-GDP ratio having skyrocketed to 124%. He calls the scenario a fiscal train wreck. With $6.7 trillion spent in the past year alone, he contends that the government's exorbitant expenditure during the pandemic never slowed down and is now almost at its peak levels. Lepard notes that the government has mainly disregarded the underlying debt issue, with little to no substantive discussion on resolving it, even while the economy is experiencing full employment and the stock market is at record highs. Lepard also says he is skeptical of spending cuts, including the $2 trillion annual cost reduction target. He points out that significant cuts are difficult to make because a large portion of government expenditure is tied to defense and interest payments, as well as benefits like Social Security and Medicare. The deficit is expected to hit a record high of $2.4 trillion this year, and even with some reduction, it will still be growing at an alarming rate. He cautions that this course is unsustainable and will probably result in a currency and sovereign debt crisis. The increasing value of gold and Bitcoin, which Lepard considers sound money replacements for fiat money, he thinks that by providing a neutral reserve currency that might aid in establishing financial stability, these assets are reacting to the rising recognition of a crisis. This would involve transitioning to assets like gold and Bitcoin to protect future generations from the cycles of debt and inflation caused by the current monetary system. Until next time, happy investing.